remember, the price that you see is not the physical trade, it's the derivative. You know, what honestly drives gold and silver long term are big financial events, big risk events. The big events are where people flock to gold and silver. So precious metals are sold off. The narrative is it's the Omicron variant, and that's putting downward pressure on a lot of asset prices. As we speak today, gold is actually up about $15 and silver up about 14 cents. So they're doing okay today. I think that's as a result of the news on the non-farm payrolls not being as robust. But really, you know, what honestly drives gold and silver long term are big financial events, big risk events. And I think right now people are expecting the holiday season. They're expecting robust sales. People are feeling good about the holiday season. There's not a lot of worry, even though we've got high inflation, some debt issues. The IMF issued a warning yesterday on Yahoo News. IMF warns of economic collapse unless the G20 extends debt relief. So unless the G20 continues to stave off foreclosures around the world, we could see more debt issues. Even though all those headlines are in the news, it's not risk on yet. People haven't really felt it yet. They're just starting to feel the effects of our economy. But until we really have a big stock market pullback, we have big news about maybe one of the Chinese firms like Evergrande completely going into foreclosure. We talk about a bank, has an issue and has to get bailed out. Until you have one of those big news events, I expect gold and silver to just kind of trade sideways. And if you look at gold in particular on a long-term chart, it's been trading sideways for a while. Now it has formed this nice cup and handle pattern, which is a bullish sign, but it can stay in that sideways movement until the next big leg up. And I think big news is what's going to drive gold and silver. Until then, it's just a trader's market. It's just people trading the futures, what they expect gold to be in the next 2 to 3 months. Until we have a really big news event, I don't expect that to really change, but that's okay. That's a buying opportunity for people. You want to buy low and sell high, you want to buy in the dip. So I've added to my position over the last couple of months. And when we see the next rise in gold, that'll benefit me. And that's really the way to play that market. I don't worry so much about the daily price movements. I look at the underlying financial data. I try to think where it's going to be in the next 2 to 3 months and make my plans that way. The cup and handle pattern is a classic pattern in which you have a high price and it forms a cup, it dips down and then it recovers, but it's overheated. That's what we've seen since 2016. This nice little cup is a recovery. Of course, we got to all-time high at 2060, about 2060, 2065 last year. Then it's faded down since then, which is normal because when prices hit all-time highs and they fade down, they'll fade down a little bit. The traders dump, at the high, and then it needs that next big news event, and that takes time. And this is not unlike the 1980 gold bull. I mean, if you look at the 1980 gold bull, it's almost an identical pattern. And then, of course, we saw what happened there and the rise in the price of gold. So I think it's typically, whether it's a stock market that you're looking at a cup and handle or the gold market or any sort of derivative market, those are generally bullish patterns. It means there was a lot of interest. People sold at the top and let it fade a little bit, and then they're going to buy it back up. And this happens in Bitcoin all the time, actually. These types of patterns. You have a rise in the price of Bitcoin, it falls down, people take profits, there's a little bit of disinterest, then you see momentum build and it comes back. This is what's going to happen to the gold market. But again, gold is driven on longer term news. So you're going to have to see some bigger, longer term news events. Now, we are having debt problems around the world, we are having inflation, but nothing's busted yet. You need something kind of to bust to people to flock to gold, right? You need that bank failure. You need something like another currency crisis, something along those lines. And that's what's going to spur the next big leg up. So I don't know how long we have until that happens, but we talked about the stock market being at near all-time highs and every time that corrects. So maybe that'll be what drives gold the next time. I would just say prepare ahead of time. You want to buy low, sell high. You also want to prepare against economic troubles. I do think we're at the end of this fiat debt cycle. So make your preparations accordingly. Just make sure that you don't have too much debt and that you have adequate amount of gold, silver, cash, whatever safe haven assets that you're into. Now, if you look at the stock market correction we had in 2019 as a result of Fed policy and hiking rates, and that 20% correction at the end of 2019, that caused gold to surge. So if it's a strong correction, gold will surge. If it's just a risk event where people are selling out of everything, you could see gold come down a little bit. Because remember, the price that you see is not the physical trade, it's the derivative. So these hedge fund managers and bullion banks will sell out of their derivative positions, to deleverage during, certain bad news events. But when you see something really panic the market, something substantial, everybody flocks into gold and to some extent silver as well. And so that's when you'll see people come back to gold en masse. Now, we just haven't had that yet. And I don't think we'll have it this year. I think next year is when you probably see something come about. I mean, Evergrande caused a temporary spike in gold, but then China diffused that by getting their state-owned entities to facilitate payments to Evergrande so they could stave off, missing those bond coupon payments. As long as that kind of stuff can go on, gold and silver is not going to pop. But if you have Evergrande finally bust and it hits the news, or you see a lot of downside dollar pressure, energy prices could affect it if they continue to spike. Those types of things long term will spike the gold price. But, the short term news, I just don't trade that in gold. It doesn't matter as much in the long run as does the big events. The big events are where people flock to gold and silver.